Hello, everybody. This is Bruce. It is Monday, March 4th, 2024. This is going to be like a little quick bite here, give you a breast after the weekend of the overall market. So taking a look right here at Heatmap, as we know, everything's green for the most part. We're going to get into all this, but, you know, the main ones, Bitcoin and Ethereum, have been doing phenomenal. Risk on assets are the appetite right now. So we're seeing that played out. But let's get started with just some economic things on the docket today. So Fed Harker had a speech. Tidbits of this speech today have been coming out, but he gave no mentioning of monetary policy today. So, you know, that's pretty telling. Harker's been if you're not familiar with the Fed, for those of you who don't reside in the U.S., Fed Harker's pretty much a very vocal proponent about rate cuts and policies and whatnot. So not giving anything, not even sliding something in there during a speech today, you know, 50-50 on taking that with a grain of salt, or they could be lining up for the next Fed speaker, because I know we have a few other Fed members that are scheduled to speak this week. And then in terms of news that I think is worthy of sharing, Japan's government considers calling into deflation. So, you know, that's pretty important here. This is something that you want to keep an eye out on for Japan, because they are a significant trading partner with the U.S. And so deflation, though that could be a good thing for us, that would be a good thing for us, but it would throw things off from a trade balance perspective, and it would stop the competitive nature of U.S. competitors. You know, the impact of domestic producers would be highly affected, who compete with Japan imports here. So, you know, that's good. We'll see how this sticks and whatnot. They do have CPI data that is coming out. Japan CPI data is coming out today, later this evening. So keep a watch out on that. But yeah, that's just something to keep watch of. We don't want a major trading partner of ours to be in prolonged deflation, because again, that they can really have a lot in terms of investment flows, global economic stability. So yeah, just keep an eye out on that. And now let's get into this. So let's just jump right into it. We got Bitcoin here. Let's go to the total though. Let's look at the total market cap. So here on my screen, you see a chart. I'm on the daily chart. I'm up here on a daily. You got inflection. So inflection means this is the point of, you can definitely confirm we're in a downtrend, or you can definitely confirm we should be more in an uptrend. And right now, crypto overall, the overall market cap of crypto is in an uptrend. It has gone parabolic as well. So I have the fib levels. You know, one thing I've noticed with crypto is when it gets this volatile, is to kind of remove your traditional horizontal trend lines and kind of see what the Fibonacci levels are showing you. So in terms of the overall market cap, you know, I would go as far as to say right now we can expect crypto to move up another, basically get up to 2.5 trillion in market cap right now, in terms of being like a major resistance point, and as low as 2.1 trillion. So before making any other decisions overall, let's take a look at just the altcoin market, which is the total 3. So the altcoin market is, you know, essentially in the same light. Let me go ahead and put a fib level up here. Do this live. So we got fib level, boom. So inflection, we don't even need to get into inflection, but 7 billion for the altcoin market. I could see 720 billion, 710 billion. 710 billion is where the fib level is. So we still have some room to run for altcoins, because we're only at $659 billion for all the altcoins. This excludes Bitcoin and Ethereum. Speaking of Bitcoin, let's go right to it. Bitcoin's chart here, again, still on the daily. Bitcoin is approaching all-time high of 69,000. So we are at the time of this video, 66,300. And we could see that. We could see a retracement. That's if it does pull back. 57K, again, it's very parabolic. And so this moving average line here is a good indicator as to potentially where it could pull back to before, either consolidating and making a run up. But right now, I would go as far as to say if we're going to see a pullback on Bitcoin, it's going to be 57,000 to that fib level, 57.6, and then, wait and see from there. Right now, just given the volatility, the interest, there's a lot going on with this particular asset in and of itself because of the ETF, because of the global nature of this, and it's traded 24 hours. Moving on to Ethereum. Ethereum got a lot of room here with Ethereum as well. Again, would not be surprised if, ETH maybe consolidates around the 3,300 level, but then it has room. Next major resistance level, playing off the Fibonacci, is 4,000. So 4,000 Ethereum is definitely in the cards if this volatility continues. All right, so let's take a look at the S&P. The S&P continues to make a new high. I'm going to go ahead and take a look at it on a trend line here. So I think the S&P still has more room to run because the relative strength on it isn't yet at a critical level, which could indicate that we still have more room to run on the S&P, which in turn would mean the Nasdaq's going to move up. The crypto market's going to move up. And, what is it? A rising tide raises all boats, or whatever that phrase is called. But that's kind of what we're having right here. And we'll see. We'll see how it plays out. Again, here is the Nasdaq. And, the same thing. The Nasdaq is primarily, tech stocks. We can thank NVIDIA for driving a lot of the S&P's numbers. I'm pretty sure we are in the ultimate greed zone for both crypto and equities. Speaking of a gauge to that, but before I move forward, talking about Hang Seng Index here, and then we have, let me span out here. Well, we got Japan. Yeah, the Nikkei. So the Nikkei is looking like it is in a huge double top. It took Japan, this was in 1990. It just now retested all-time highs from 1990 to 2024. And this is a double top pattern. So again, Japan's economy, they're a big trading partner of ours. They are making new highs, but if this starts to roll over, I would definitely pay more attention to our market as well, and go from there. Europe is making as well all new highs. The DAX, this is the German index here. So yeah, let's take a look at the VIX. This is mainly for equities. So it's real simple with the VIX. I know you see a lot of colors here and a lot of lines. The white line here is the average. We'll just say this is the middle of the road number, neutral. So if we're below this, then there isn't really much opportunities in the market. Like the opportunities are waning the lower we go, below 22. We are now at 13, and really at this stage of the game, as the saying goes, when the VIX is low, it's time to go, meaning there are a lot of overvalued equities right now. So deals are few and far between. I went ahead and did a trend line on the VIX, on the daily here, because we've been bouncing. If you notice, we've bounced. We've been trending up, bounced. So we'll see how this candle If we bounce and then keep moving up, if we keep grinding up and showing such a pattern, we could get back to elevated levels, which then means opportunities are going to start presenting themselves within the equities market. You won't have overvalued companies at play. Things will come back to reality. So remember that when the VIX is low, it's time to go. This is very low in the VIX, but when the VIX is high, it's time to buy. So these extreme levels here, in the 30s, but definitely crossing 22, more opportunities. So if you're in the equity space, you still have time to do your valuations, to still look for opportunities with companies at play. But the VIX is low. It's time to go. It says complacency. It says everything's fine with the economy. Everything's fine with the markets. And we all know that is not the case. All right, rounding this up here with ETFs. So here is the Bitcoin Blackrock iShares. This is going parabolic. I mean, because obviously the asset class crypto is going parabolic itself. So we have that. And then we also have the Fidelity. These are the two major ETFs per volume, per buying. These two are buying like crazy. So Blackrock and Fidelity. And yeah, in terms of this chart, when this starts to roll over, you have a lot of gap to fills. So, just be cautious, but enjoy the ride right now. We're definitely overextended. Irrationality is at the forefront right now of the markets. There's nothing rational right now about the markets. And there's also a slight adjustment going on. We're entering a new phase with wealth and transfer of money and how things are valued. Like, you cannot value a Bitcoin. Can't put a value on it like you would an Apple or Google, because there's no revenue, income. There isn't anything like that. So the valuations for these are definitely going to take shape over the next decade in terms of how do you value. On-chain data definitely plays a role in determining where we're at in overbought, oversold conditions, entering into a bear market or a bull market and what have you. But yeah, that's that. Just a quick, TA assessment of just the core items and where we are. I'll see you guys tomorrow, and check out our community at My Tech Academy. It's mytechacademy.io. We got a vibrant community. I'm in there. Lead instructor and founder Eli is in there, and as well as our IT guru Chuck as well. So well taken care of. We are active participants in our community, active instructors. So yeah, give us a shout out. Check us out, mytechacademy.io. Is that My Tech Academy? There we go. mytechacademy.io. Here we go right here, guys. And you have been listening to this handsome guy right here, Bruce. And then here is Chuck, and there is Eli. So, we all could actually probably start our own modeling agency. Good looking men here. But anyway, that's for another video. See you guys later.